Welcome to your Daily Five. I'm Bruce Fraser, and I'm honored to be your host for the inaugural episode of your Daily Five. Each weekday, a superstar analyst will review five of their key charts with you. Producer Rachel has assembled a who's who list of market analysts for future episodes. So don't miss your Daily Five at 1 p.m. Eastern Time weekdays. And here are my five great charts in 10 short minutes. Here you can see in chart number one, this is the New York Stock Exchange Composite Index, 50 years of history. There's an important recessionary low in 1974, another recessionary low in 1982. These were both severe recessions. Wyckoff said that a stride would be formed early in an uptrend. So you can see here these two adjacent lows produce this demand line, and then these two peaks, early peaks, are parallel overbought lines and set the stride for the advance in this trend channel. You can see distribution at the 2000 peak. You can see distribution at the 2007 peak, and after a sharp decline, the great recessionary low, there is an important penetration of the demand line temporarily, and it turns back up in and starts a very important bull market run that lasts 10 years. But notice that the rate of advance is slowing. The momentum is slowing in this important bull market run. And in 2020, there is an important break of the demand trend line. And it breaks on very high volume, and it is still below the demand line. It is trying to go back up, but we will be watching closely to see if the New York Composite can get back above the trend line, and if it gets to the trend line, if this is important resistance. This is a very important chart in my estimation, and we'll be keeping a very close eye on that in Wyckoff power charting, but also you should be watching it too. Wyckoff market discussion every Wednesday. The 422 episode is going to be free. Join us. Sign up at wyckofanalytics.com. It's free, and you can sign up right on the homepage. Chart number two is gold. You can see here resistance at this 1800 level, and you can also see resistance at the 1923 level. This is the 2011 peak, the 2012 peak. Beautiful reaccumulation structure after a very long bull market uptrend, and now we've touched this first resistance line. Notice that this bull market run, that each of the reactions on the way up has been quite shallow. Go back and read my blog from August of 2018, Wyckoff Power Charting. You can read it in the archives, and you can see that each of these reactions has been very shallow. We will look for that again to occur either here or here, and then for gold to be able to follow through if it can have a shallow reaction and not come deeply back into the structure. Chart number three. Flowers Foods. Flowers Foods is a very important food producer, largest bakery in the country that has a very good yield of 3.28%. You can see a range-bound condition back in 2015, 2016. Flowers Foods has been trading in that range-bound structure ever since. This whole area looks like reaccumulation. You can see after the selling climax and secondary test that there's attempts to work back up to the 2015 high, and now it's knocking on the door. So relative strength here, very large accumulation type structure in the relative strength base, a very sharp jump as it's jumped above the long-term moving average again. So if this can continue, This suggests that Flowers Foods and the food producers could become important leadership. So I'm going to cheat and show you another chart. Here is a point and figure chart, and this is the area from the backup to the selling climax, and you can see that this counts 58 to 62, and the current area is $23. So this is important swing trading, potentially a campaign trading candidate. Next stock, Campbell Soup, important cyclic decline. Campbell Soup, look at this distribution. So oversold at the selling climax below the channel. Test the channel again at the secondary test, building an accumulation structure going back. Relative strength, when it's in a downtrend, avoid these stocks. But Campbell Soup has been stealthily going upward on its relative strength basis, and now is starting to accelerate. Very exciting. What does the point and figure look like? Well, chart number 4. Interesting. Here's the distribution. Look at how well the distribution count went right to the lows where accumulation formed for Campbell Soup. There's a small swing trading count that goes 64.72, and then a larger campaign trading count that goes 100, 110. So one thing at a time. But these point figure counts are very constructive and compelling. So there is chart number 4. Chart number 5 is a more speculative stock, and maybe not ready for prime time, but it's interesting. So let's have a look, because we're focusing on the stay-at-home economy. Yield 5.5%. I don't know if this yield can hold. It may change, but here's the downward trend. You can see the relative strength is also downward. Avoid stocks when they're in downward relative strength trends. So trend channel oversold here, here, and here, and then it comes down. It's trying to build an accumulation type base. It may not be done yet, but here's a spring. Look at the vertical jump back up into this accumulation type structure after the spring. This is exactly what we would be looking for. And so downward trend, but look, green shoots. You can see an attempt after going all the way back to 2016, 2017, where this downtrend has been in place for the relative strength, then all of a sudden it's trying to get above its downtrending moving average. So it's not really turned up yet, but this could be green shoots for the future. And then of course, the last thing we want to do is look at, for chart number 5, is to look at the point and figure chart. Here is distribution. This count across here produces a count that goes down to as low as $27, 39 to 27. It goes below 27, pushes down 3 times, but now notice with this recent strength, it's back above the 27 count area, and this looks like it could be the emergence of important accumulation for the future. So we will keep a close eye on this, and also we're going to talk more about the stay-at-home economy as we go forward in power charting this Friday and future episodes. So with that, thank you for coming to the Daily 5, and we will see you again next time.
Hey guys, Grayson Rose here with StockCharts.com. Thank you so much for watching. I hope you enjoyed this video. Remember, if you did, give us a like down below, leave us a comment. We'd love to hear from you. And most importantly, don't forget to subscribe to our YouTube channel for daily content from an incredible collection of technical analysts and financial minds. We'll see you back here very soon. Happy charting, my friends.